Hi, hello dear intermediate students. Welcome to the part 2 of MAY'25 questions. So in the part 1, we have already completed up to question number 25. And the video related to part 1 of MAY'25 you can see in the description to this video. And now in part 2, we are going to see question number 26 onwards. So without further delay, question number 26. Rudra Limited raised invoice for services for rupees 1 lakh excluding GST at 18% on 15/9/2023 and reported the same in their GSTR 1 of September 2023 filed on 11th October 2023. So Rudra Limited is a supplier, they raised the invoice on 15th September and 15th September when they raised the invoice they reported it in GSTR 1 of September, that is filed by 11th of October. So everything they did rightly, and because of which it will be reflected in the 2B of the recipient for September 2023 month itself. Abhi Limited, who is the recipient of such service, availed ITC in 3B of September. See, it got reflected in 2B, so therefore recipient availed the ITC in 3B of September 2023, filed on 18/10/2023 and utilized the same for in GSTR 3B of November 2023, filed on 20th December. So they availed the ITC in the 3B of September and utilized the ITC in the 3B of November, which is filed on 20th December. Rudra Limited has not filed 3B with respect to September 2023. So supplier did not file GSTR 3B. When supplier did not file GSTR 3B, section 41 read with rule 37A gets attracted, which means the recipient should reverse the ITC. Okay, so therefore what happened, Abhi Limited, that is recipient, reversed the ITC in GSTR 3B of December 2024. What is the time limit? So if the supplier not filed GSTR 3B by September of the succeeding financial year, that is September 2024, then the recipient should reverse the ITC by November. If it is not reversed by November, then in that case, interest will be payable here, and compute the interest payable by Abhi Limited and consequences with respect to ITC if Rudra Limited files GSTR 3B of September 2023 on 18 February 2025 and discuss whether any interest is payable by Rudra Limited. So supplier is required to pay any interest or not, assuming no other transactions are there for Rudra Limited. First we will write about section 41 read with rule 37A as Rudra Limited not filed 3B of September 2023 by 30th September 2024. ITC availed needs to be reversed by 30th November 2024. If not reversed, they need to pay interest. Interest at what rate? 18% per annum. And from which date to which date? From the date of utilization till the date of reversal. What is the date of utilization? So what is the month in which they have utilized? November 23. For November 23, when they filed 3B, 20th December. So 20th December will be taken as the date of utilization. So therefore interest from the date of utilization, that is 20th December 2023 till the date of reversal. Which month they have reversed the ITC? They have actually reversed the ITC for December, filed on 17/1/2025. So till 17/1/2025, what is the number of days? So 20th December, don't count 20th December, count the remaining days in December, that is 11 days in December. Okay, and 20th December to next year 20th, that is 365 days, and then in December 2025 11 days, and in January 17 days. Okay, so that's how we need to count in this case, because total 17/1/2025, simple here, 20 December 2023 to 20 December 2024, 20 December 2024. So what is that? 365 days, and thereafter we have this 366 now, because 2024 also will get covered. So 366 days, and then in December we have 11 days. Okay, add that 11 days, and thereafter in January add 17 days. So you will get 394 days. So interest payable will be on the ITC component. What is the ITC component? 1 lakh into 18%, that will be 18,000 into 18% into 394 by 366. See, February 2024 comes in the numerator, then in denominator we need to take 366 days. So 3,488. When Rudra Limited files GSTR 3B on 18 February 2025, whatever ITC that is reversed by Abhi Limited can be re-availed as ITC. No time limit for that. It can be availed, but the interest cannot be re-availed. Okay. So as 3B is filed late by Rudra Limited, so Rudra Limited also required to pay interest. Actually this is pertaining to which month? This is pertaining to September 2023. For September 2023, by when they should have filed? 20th October 2023. So interest will be computed from 20th October 2023 to till the date they are filing 3B. What is the date on which they are filing 3B? 18/2/2025. So 20 October 2023 to 20 October 2024. So that is 366 days. Then in October 11 days, in November 30 days, December 31 days, January 31 days, and February 18 days. That will come to 487 days. So 487 by 366, this is the interest which is payable by supplier because of delay in filing GSTR 3B. So 4,311. So they can ask this interest computation question. So connecting supplier as well as the recipient because of ITC. Okay, next question number 27. Discuss whether e-invoice or dynamic QR code invoice is applicable in the following cases. A government department is registered under GST, its aggregate turnover in the preceding financial year is 22 crores. And they are making outward supply to registered as well as unregistered persons. So first of all, their turnover during the previous year exceeds 5 crores. So for B2B supplies, generally they need to give e-invoice, but there are some people who are not required to give e-invoice. Who are they? So that is biggest. In that government department is there. So for B2B supplies, e-invoice is not required, as government department or local authority is covered under exclusion list for e-invoice. Okay. For B2C supplies, will they be required to collect the payment through dynamic QR code? No, because dynamic QR code is applicable only if aggregate turnover during any previous year exceeds 500 crores. Here it is just 22 crores. It does not exceed 500 crores. Due to that reason, this dynamic QR code invoice also not applicable. Then next, number 2. Dreamworld Private Limited is registered under GST in the state of Haryana. During the preceding financial year, its annual aggregate turnover was 12 crore. In the month of April 2023, it supplies goods worth rupees 12 lakh to Nightmare Limited, registered person in SCZ. Now, in this case, supplies to SCZ. So definitely e-invoice will be applicable only supply by SCZ unit only. E-invoice is not applicable. Moreover, here the turnover is 12 crores. Okay. And in this case, so first of all, dynamic QR code is not applicable in case of B2B supplies, only e-invoice. Only for SCZ unit, supply made by SCZ unit only e-invoice is restricted. So but here e-invoice applicable as aggregate turnover during previous year exceed 5 crores. And not covered under exceptions. Next, number 3. Bali Limited is registered under GST in Maharashtra and is situated in SCZ, having an aggregate turnover of 600 crores during previous year. They made supplies to Adarsh Private Limited, an unregistered person. So they are registered under GST and is situated in SCZ. Supplies by SCZ, we don't have any relaxation for dynamic QR code. First of all, it is B2C, so that's why e-invoice not applicable. Dynamic QR code is applicable. So biggest is only for e-invoice, not for dynamic QR code. For dynamic QR code, it is big toe. SCZ unit is not there. So supply by SCZ is not covered under the exceptions, and as aggregate turnover exceed 500 crores, therefore dynamic QR code is applicable. Then next one. Harnam and Company, dealing in interior decoration products, made supplies to various persons located outside India, and the aggregate turnover of Harnam and Co in the preceding financial year is 650 crores. Generally for exports, we need to give e-invoice. Okay. So dynamic QR code is not applicable in case of export of goods. Always e-invoice is only applicable. Don't check whether it is B2B or B2C. And dynamic QR code is not applicable if recipient is located outside India. So this is related to e-invoice and dynamic QR code. They can coin a question like this. Then question number 28. Happy Limited, located at Alwar, Rajasthan, exclusively manufactures and sells product Shine and Shine, which is exempt from GST. So they are making only exempted supplies. When a person is making only exempted supplies, they are actually exempted from registration. They are not required to get registered. Okay. So Happy Limited sells Shine and Shine only within Rajasthan. The turnover of Happy Limited in the previous year was 60 lakhs. Happy Limited purchased additional machinery capital goods for manufacturing Shine and Shine on 1st April. The invoice for supply of machinery was also issued on 1st April 2021. They purchased one machinery. Can they take ITC on the machinery purchase? No, because basically they are making only exempted supplies, means they are not getting registered. So unregistered person cannot avail ITC. The purchase price of the machinery was 25 lakhs excluding GST. On 1st December 2021, the exemption available to the product Shine and Shine was withdrawn, which means from 1st December 2021, they are liable to get registered. Why? Already their turnover was 60 lakhs. And so therefore, now when the product, exempted product become taxable, they are liable to get registered from 1st December 2021. And accordingly, GST was imposed. The turnover as on 30th September itself was 45 lakhs. So they crossed the applicable threshold limit already. Examine the issue and provide the answers with supporting explanatory note for each answer to the following. Does Happy Limited have to register under CGST Act? First of all, we need to write about the applicable threshold limit. So where they are located in Rajasthan and they are exclusively engaged in supply of goods. A person who is operating in one state and that state is other than MMT and U stamp and they are exclusively engaged in supply of goods and other than ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles, definitely the applicable threshold limit will be 40 lakhs. Okay, so the applicable threshold limit for them is 40 lakhs and they have crossed the 40 lakhs, but even then they are exempted from registration. However, with effect from 1st December 2021, they are liable to get registered and they should make application for registration within 30 days from 1st December 2021. Got it? So that is about the registration point. Then B, can Happy Limited take credit of tax paid on machinery purchase? Can they take ITC? First of all, are they getting now only registered? Yes, which means so we can avail the ITC on closing stock as per 18(1)(a) or 1D. So here exempted supply to taxable is also there and unregistered person is getting registered. So definitely 18(1)(a) is only applicable because exempted supplies to taxable is only for already registered person. So here in this case, so they are not already registered. So 18(1)(d) will not be applicable. So only 18(1)(a) will be applicable. In case of 18(1)(a), they can avail only ITC on closing stock, that is input as such held in stock, inputs in WIP held in stock and inputs in FG held in stock, but not on capital goods. So due to that reason, it is not possible. Is that clear? Then question number 29. Messrs. Texpeer Electronics Limited, a registered manufacturer under GST, is engaged in supply of consumer electronics including televisions, refrigerators and washing machines. The company provides a standard manufacturer warranty on its products and also offers customers an option to purchase extended warranty either at the time of sale or after the original purchase. Messrs. Texpeer operates through a network of authorized distributors who handle warranty replacement on its behalf. So this is what Texpeer Electronics Limited. Okay, during Jan 2025. So first paragraph is about the knowledge of business. During Jan 2025, the company undertook multiple transactions concerning warranty replacement and extended warranties. In one case, a distributor, Messrs. Fast Track Electronics, replaced 100 display panels worth rupees 8 lakhs for defective televisions from its own stock under the standard warranty and subsequently invoiced the Texpeer charging GST at 18%, which was duly paid by Texpeer. Basically what distributor did, so distributor has replaced 100 display panels for defective televisions out of their stock, okay, out of their stock, and they are raising an invoice to Texpeer charging GST at 18%. In another instance, a distributor, Electromart Limited, received spare parts or spare compressors worth rupees 5 lakh directly from Texpeer for refrigerator repairs under warranty, with the manufacturer supplying these parts without charging any consideration. So in first case, what happened? The first case is Fast Track Electronics. In case of Fast Track Electronics, they have some stock. They are using that part out of the stock and they are replacing and they are recovering it from the manufacturer. Okay, so what is the treatment in that case? Whenever they are recovering from the manufacturer, they need to pay GST on that and the manufacturer can take ITC with respect to this. As simple as that. And that stock, whatever they have purchased, that Fast Track Electronics purchased some stock now, out of that stock they replace during warranty period. Can they take ITC on that? Yes. 2 points you need to write. First one, Fast Track Electronics purchase some goods which is in the stock that is replaced for warranty. They can take ITC on the goods purchase which is replaced for warranty. Second, when they recover that money from the manufacturer, they need to pay GST on such recovery from the manufacturer. Simple. Second, what about manufacturer? Manufacturer got an invoice from the Fast Track Electronics. Okay, manufacturer is Texpeer Electronics. Can they take ITC with respect to that invoice? Yes. This is the treatment. Then another case, in case of Electromart Limited. Electromart Limited, what is happening? Electromart Limited is not taking anything out of their stock. They are asking manufacturer, boss, send me, I need to replace, for which the manufacturer is sending. Now in that case, can manufacturer take ITC on the parts purchase? Yes, manufacturer can take ITC on the parts purchase which is used for replacement during warranty period. He can take ITC. Moreover, when he is sending it to the Distributor, it is not a supply. GST not payable as per CBIC circular. And distributor just replaces it. That's it. There is no consideration involved in that. Then further, taxpayer. So this is the answer for first two parts. So up to this, first distributor replaces 100 display panels and invoices taxpayer. Now the supply is made by Fast Track Electronics to taxpayer. Transaction value they are recovering na 8 lakhs. 8 lakhs GST 1,44,000. 1,44,000 IT is available to taxpayer. GST treatment, GST payable as expenditure incurred is being recovered. IT is fully available to the recipient. Okay, so that recipient is this taxpayer. Then second case, manufacturer supplies spare compressors to distributors without consideration. So here supplier is taxpayer, recipient is Electromart, and it is not a supply. Transaction value not applicable, as the same is not a supply as per CBIC circular, and the movement of goods is under the cover of a delivery challan. Okay, so that is whenever there is a movement of goods which is not under supply, that should be under the cover of a delivery challan. So there is no GST liability and GST not payable by taxpayer, and consequently ITC question shall not arise. So that's it over two parts. Then next, further, taxpayer offered extended warranties to customers. A customer purchased a 65-inch smart TV for rupees 1,20,000 and opted for an extended 3-year warranty for rupees 10,000, which was provided by taxpayer at the time of original supply. The total value of rupees 1,30,000 was invoiced together, and GST at 18% was charged on the full amount. Okay, so what happened? One smart TV they are selling for 1,20,000 and opted for extended warranty 10,000. So taxpayer only provided at the time of original supply. The total value 1,30,000 was invoiced and GST 18%. Whether 18% is applicable even on warranty? Yes. In contrast, another customer purchased a fully automatic washing machine of 50,000 and 1 year later opted for an extended warranty of 7,000. So that 7,000 will be treated as an independent supply. So say this. First, extended warranty at the time of original sale, supplier, taxpayer, recipient, customer. So full 1,30,000. So on the 28%. And GST payable on full amount at the rate applicable to transaction value being composite supply. Whereas extended warranty purchased after original sale from third party. Here the supplier is Secure Services. Secure Services, an independent warranty provider, and the customer. What is the amount for that? 7,000. That 7,000 only will be taxable separately, and GST payable on warranty charges, treating it as separate supply at the rate applicable to warranty charges. What if the TV rate is 28%? Then in this case, first case, the warranty also will be taxable 28% because warranty will be treated as part of original sale. Okay, so due to that reason, that original sale GST rate will be applicable for warranty also if the warranty charges is collected at the time of sale by the same supplier. Same time, same supplier. Okay, so that is the part. Question number 30. Measures Autoglide Motors Limited, an authorized dealer of motor vehicles, purchase automobiles from manufacturers and sells them to customers. So basically they are buying and selling. As per dealership norms, the company is required to maintain demo vehicles at its showroom for test drives and promotional activities. During January 2025, Measures Autoglide Motors purchased 10 sedans from XYZ Automobiles Limited for 50 lakhs, including GST at 28% for exclusive use as demo vehicles for test drives and customer demonstrations. Additionally, one of the demo vehicle was also used for transporting company employees between dealerships. The company capitalized these demo vehicles in its books as fixed assets for rupees 50 lakhs. What is the price? 50 lakhs including GST. You understood what is the mistake that they did? They have capitalized full value including GST. They have capitalized full value including GST. Even though IT is available on demo vehicles, usually IT is available on demo vehicles, we have a CBIC circular, but they should not have capitalized the full amount including GST component. After 1 year of use, Measures Autoglide Motors sold 5 demo vehicles, which is used for test drive for rupees 30 lakhs, excluding GST at 28%. Answer the following questions. Whether Measures Autoglide Motors Limited can avail ITC on purchase of demo vehicles and compute the ITC available in Jan 2025. So first, as per CBIC circular, IT is available on demo vehicles. Since they are eventually sold, classifying them as used for further supply, ITC is not blocked. In such case, if a demo vehicle is used for employee transport and other non-sale activities ITC is not available. In the present case, Autoglide Motors can avail ITC on 9 demo cars purchased and cannot avail ITC on 1 demo car because, see this. The company has capitalized these demo vehicles in its books as fixed assets for 50 lakhs. Okay. So total how many they purchased? 10 sedans for 50 lakhs. Okay. These vehicles fully, and however, as they capitalize the full value of the cars purchased including the GST component, they cannot avail ITC on all the cars purchased. Okay. So here ITC on 10 Autoglide Motors can avail ITC on 10 demo cars purchased for being used in test drives. Okay, test drives, that is the point. However, as they capitalize the full value of cars purchased including the GST component, they cannot avail ITC on the cars purchased in terms of 16(3). We have the restriction. Compute the GST payable on sale of such demo vehicle. So Autoglide Motors sold 5 demo vehicles which is used for test drives for rupees 30 lakhs excluding GST at 28%. Now in this case what we need to do? So 18 subsection 6 is not applicable. Generally when you purchase the capital goods on which ITC is availed, okay, and if you dispose of that capital goods, then only 18 subsection 6 will come. ITC availed minus 5% for every quarter or part thereof, or GST on sale value of such capital goods, whichever is higher. But in this case, first of all, you have not availed ITC. As you have not availed ITC, whenever we are selling this demo cars for 30 lakhs, on that we need to pay GST. So 30 lakhs into 28% will be the GST payable on sale of such demo cars. Okay. And this point number C is irrelevant. You don't have to bother about that. So that point is not there for you. So just 30 lakhs you take into 28%. Why not 18 subsection 6? 18 subsection 6 is not applicable. Why 18 subsection 6 is not applicable? Because ITC not availed. What if ITC availed on the demo cars? Then when the demo car is sold, you can apply 18 subsection 6, that is ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal, or GST on sale value of such capital goods, whichever is higher. That point can be applied. Okay. Then next one. Question number 31. Rameshwar Industries is engaged in manufacturing semiconductors in the state of Assam. It makes only intra-state outward supplies. Following details have been made available by Rameshwar Industries. Date of commencement of business March 14. Date on which turnover exceeded 10 lakhs March 29. Turnover exceeded 20 lakhs, 40 lakhs. Basically, where are they doing business? In the state of Assam. So for Assam, MMTN no. U stamp also no. So it will come under other states. Correct? So in U stamp, what is A? Arunachal Pradesh, not Assam. So MMTN we don't have Assam. So the applicable limit will be 40 lakhs if they are exclusively engaged in supply of goods. So April 28 is the date on which they are liable to get registered, not April 15, April 28. Date of application for registration as per the provisions of section 22 is May 15. Whether they are making application for registration within 30 days or beyond 30 days. So see there, they are making application for registration April 28 now. April 28 to May 15. Yes, it is within 30 days. They are making application for registration within 30 days. Within 30 days. So what will be taken as the effective date of registration? April 28 will be taken as effective date of registration, and date of issuance of certificate of registration is May 29. Based on the above information, you are required to determine the following by briefly stating the relevant provisions. Okay. So what is the effective date of registration of Rameshwar Industries? So Rameshwar Industries, the effective date of registration. So they have exceeded the threshold limit. Applicable limit is 40 lakhs. They exceeded 40 lakhs on April 28. So they have made application for registration within 30 days. Therefore, the effective date of registration will be April 28. That is the date on which they are liable to get registered. What is the period for which revised tax invoice can be issued? They can issue the revised tax invoice from the effective date of registration till the certificate of registration. So April 28, 2024 to May 29, 2024, they can give revised tax invoice from the date they are liable to get registered, effective date of registration till the certificate of registration, and that revised tax invoice should be given within 1 month from the certificate of registration. Timeline within which such revised tax invoice should be issued. When they got certificate of registration May 29 na, So May 29, within 1 month from May 29, that is June 28, 2024 is the time limit by which revised tax invoice should be issued. So that is the answer for this. This is purely an application of revised tax invoice. Then question number 32, answer the following questions. What is blocking of e-way bill generation facility and in which situations it will be blocked? So usually when e-way bill will be blocked, if a person has not filed returns for 2 consecutive tax periods, okay, either GSTR 1 or GSTR 3B or CMP 8 composition scheme. So either GSTR 1 or GSTR 3B, okay, GSTR 1 or GSTR 3B or CMP 8 for 2 consecutive tax periods. You write tax periods. If it is months, 2 months. If it is quarterly return, 2 quarters. Also, if there is any suspension of registration, these are the cases where their e-way bill facility will be blocked with respect to outward supplies. Number 2, whether recipient can generate e-way bill of blocked GST and indicating them as supplier and vice versa, not possible. Why not possible? Once their e-way bill is blocked, so neither the supplier nor the recipient nor the transporter or any other person, if the taxpayer GSTN is blocked for e-way bill, that GSTN cannot be entered in e-way bill as supplier. Thus, the recipient cannot generate e-way bill indicating such blocked GSTN as supplier. Can the transporter or e-commerce operator or courier agency generate e-way bill in respect of blocked GSTN either as supplier or recipient? So no, even they also cannot do. Transporter or e-commerce operator also cannot do, not possible. Okay, so transporter or e-commerce operator also not possible with respect to the GSTN of the supplier as supplier. Okay, next, can e-way bill be generated for inward supply of blocked GSTN? That is possible. Suppose if there is only outward supply e-way bill is blocked, but for inward supply e-way bill is not blocked, which means with respect to inward supplies they can generate e-way bill. Okay, e-way bill can be generated with respect to inward supplies of such blocked GSTN as the restriction is with respect to outward supplies of such blocked GSTN. Can the blocked GSTN transport exempted goods? Exempted goods, see here, first of all, exempted goods does not require e-way bill, so then what is the need of it? When exempted goods are transported, anyhow e-way bill is not required. Therefore, blocked GSTN cannot transport exempted goods they can transport under the cover of a bill of supply. Anyhow e-way bill not required for exempted goods. So that is the answer for this question. This is on e-way bill. Next, question number 33. Agni Limited filed GST return under section 39 for the month of January 2021 on 11th April 2021. Original due date for the said return was 20th February 2021. Details of tax assessed as payable for the said month are given below. Output tax payable 1,80,000, tax payable under reverse charge 40,000, input tax credit available for utilization. What is the meaning of available for utilization? Which means even this RCM would have been availed in 70,000. So in this 70,000, this 40,000 will be included. Okay, see, available for utilization. What is the meaning of ITC available for utilization? ITC availed minus ITC reversed. In ITC availed, even GST paid under RCM also will be under ITC availed, which means in this 70,000, that 40,000 will be included. What is the treatment of GST paid under RCM? Always GST paid under RCM should be paid using the cash ledger, and that can be adjusted against the FCM liability. So what is the FCM liability? 1,80,000 and 1,80,000. Okay, so FCM liability will be 1,80,000 minus ITC utilized 70,000, 70,000. So we got 1,10,000, 1,10,000. Add RCM liability. What is the RCM liability? 40,000 and 40,000. So we will get 1,50,000 and 1,50,000 as the total net tax payable through electronic cash ledger. 1,50,000 and 1,50,000. Got it? Now, on this 1,50,000, so we need to pay the interest. So they are asking first question, compute the net GST payable in cash, 1,50,000. RCM always payable by cash. Assuming the company has a ITC balance of 2,50,000 each under CGST, SGST for the segment, compute the interest. Okay. So basically here there is a delay in filing 3B. Agni Limited filed GSTR1 for the month of Jan 2021. What is the due date? Feb 2020th Feb 2021. But they filed it on 11th April 2021. So there is a delay in filing 3B. Delay in filing 3B. So for how many days? 20th February to 11th April. So 20th February means you take 8 days in February and March 31 days. Then April 11 days. So that is 50 days is the period. And we need to compute interest on 1,50,000 and 1,50,000. So interest will be payable. What if they have an ITC balance of 2,50,000. Even then, when they have ITC balance of 2,50,000, from 1,80,000, 2,50,000 will be gone. So FCM liability will become 0. But even then, RCM liability we have to pay through cash ledger. That is this 40,000 and 40,000. So interest will be computed on that 40,000. See this. Output tax payable 1,80,000, 1,80,000, IT is utilized 1,80,000, 1,80,000 because we have 2,50,000. So net tax payable under FCM 0, but RCM liability will be 40,000 and we have some excess credit carried forward. Okay, but even then on this 40,000 we need to compute interest. So for the same 50 days 986 rupees. Okay, and we have to give some notes related to this. RCM liability cannot be paid using credit ledger and has to be paid only using cash ledger. As turnover information, why are we not applying rule 86B in this case? See, we don't have the taxable turnover. Only when we have taxable turnover in the month, we need to apply that 1% of liability through cash ledger. That is not applied. As turnover information in a month is not available, rule 86B restriction is not applied. That is payment of 1% through cash ledger. Then for delay in filing 3B, interest will be payable at the rate of 18% on what? Net liability. That is that much amount which is paid through cash ledger. On the liability discharged through electronic cash ledger. Okay. Then question number 34. The aggregate turnover of Mr. Prithvi, a registered person, for the financial year 21-22 was 440 lakhs. That is their aggregate turnover, 440 lakhs. The outward supply of Mr. Prithvi is exempted owing to notification from central government, and Mr. Prithvi decided to cancel his registration during the financial year. He filed the final return, but he has not filed the annual return under section 44 of CGST Act before the due date, as he is of the opinion that either final return or annual return is required to file, but not both. Wrong. See, in that particular financial year, if you have done the operation even for a few days, we need to file the annual return. So the annual return needs to be filed by 31st December of the succeeding financial year. What is the financial year? 21-22 na? So they need to file the annual return by 31st December 2022. That too 4.4 crores. So it exceeds 2 crores. No doubt they need to file annual return. Okay. And so therefore in this case, since Mr. Prithvi registered as normal supplier more than 2 crores, they have to submit annual return by 31st December 2021. And what is the late fee? The late fee for delay in filing annual return, so it is more than 2 crores. That is, it does not exceed 5 crores. If it does not exceed 5 crores, then it will be 25 rupees per day is the late fee. Okay. If it does not exceed 5 crores, it is 25 rupees per day. If it exceeds 5 but does not exceed 20 crores, double 50 rupees per day. If it exceeds 20 crores, 100 rupees per day. So here it is 25 rupees per day. And what is the maximum? First two cases, that is if it does not exceed 5 crores or exceed 5 but does not exceed 20. The first two cases 0.02% of turnover, and if it exceeds 20 crores, it will be like 0.25% of the turnover. Here it is 0.02% of the turnover. That is the maximum amount. Okay. However, final return is also required to be filed. See, just because we file annual return, see, annual return is for a different purpose. Final return is for reversal of ITC on the closing stock. So that final return needs to be filed within 3 months from the date of cancellation or 3 months from the order of cancellation, whichever is later. That is the time limit by which they need to file the final return. So both are required. So in case of cancellation of registration, a person is required to file final return within 3 months from date of cancellation or 3 months from order of cancellation, whichever is later. Filing of final return does not make a person exempted from filing annual return, and in the present case Prithvi was required to file annual return as well as final return. Okay. And next, so what is the maximum late fee for annual return? Simple, 440 lakhs into 0.02%, that is 8,800 rupees will be the late fee, because they are asking also discuss the provisions of late fee if any for not filing the returns by the due date. Then next one, question number 35. This question number 35 is related to TDS. Manihar Enterprises, registered in Delhi, is engaged in supply of various goods and services exclusively to government departments, agencies, etc. and persons notified under section 51 of CGST Act. It has provided the information relating to supplies made, their contract values and the payment due against each of them in the month of October as under: supply of stationery to Fisheries Department, Kolkata, total contract value 2,60,000 inclusive of GST. Take out GST, because while discussing the contract value, when TDS will be applicable, if value of supply under the contract exceed 2,50,000, but the 2,50,000 excluding GST. So 2,60,000 including of GST na, what is the GST rate? 18%. If you take out GST, what is the portion? So that is here 2,60,000 excluding GST 2,20,000, it does not exceed 2,50,000. So therefore TDS is not applicable in this case. Okay. Then second one, supply of heavy machinery to public sector undertaking located in Uttarakhand. Yes, definitely 5,90,000. So inclusive of GST, if you take out GST also, it is exceeding 2,50,000. So TDS will be applicable. Second point, after the value, that's next thing you need to check is that whether the, it is intrastate or interstate. So here, if you observe, where is this supplier located? The supplier is located in Delhi, and it is supply of machinery to PSU in Uttarakhand. So ending point will be Uttarakhand. Therefore, it is interstate supply chargeable to IGST, and accordingly, so TDS will be deducted by the recipient, public sector undertaking, on what? Only on 25,000 payment remitted. Say this, payment due in October, only on 25,000. So 25,000 into 2%, so 500 rupees is the TDS. TDS is always on the payment due, so not on the contract value, on the payment that is remitted by the recipient. On that only it will be computed. Then third one, interior decoration of Andhra Bhavan located in Delhi. Service contract is entered into with the government of Andhra Pradesh, registered only in Andhra Pradesh. 12,39,000. First we see the value. Value wise it is more than 2,50,000. Then determine the place of supply. This is what? Interior decoration. Interior decoration means service in relation to immobile property. For any service in relation to immobile property, what will be taken as a place of supply? Location of such immobile property will be taken as a place of supply. So where is the immobile property located? Immobile property located in Delhi. So supplier is also Delhi. Manihar Enterprises, place of supply also Delhi. So it's a intrastate supply. But where is the recipient located? Another state. So TDS is not applicable. If it is an intrastate supply and the recipient is in the another state, TDS is not applicable. So accordingly, TDS is not payable in this case. Okay. That interior decoration of Andhra Bhavan located in Delhi, okay, that case TDS not applicable. Then third point we skipped. See the third point, supply of taxable goods to Delhi office of National Housing Bank, a society established by Government of India under Societies Registration Act. So sale of goods to Delhi office. So ending point is Delhi, goods. Ending point Delhi, therefore supplier also Delhi, place of supply also Delhi, and it is intrastate supply chargeable to CGST, SGST. Value wise also it is more than 2,50,000. So on that 50,000 it will be, so 1% CGST and 1% is GST. That is this answer. Okay. And interior decoration, so no TDS. Then point number 5, supply of printed books and printed postcards to West Delhi Post Office out of the total contract value of 9,72,000. Contract value for supply of books exempt from GST 7 lakhs, and for supply of printed postcards taxable under GST is 2,72,000. Exempt don't take, only taxable value you see 2,72,000. Okay, so 2,72,000 and all these inclusive of GST. So 2,72,000, what is the rate of GST? 18%. So see this, 2,72,000 into 100 by 118, 2,30,000. As the value does not exceed 2,50,000, TDS is not applicable in this case. Supply of printed books, only taxable supplies we need to see. If the taxable value of supplies under a contract exceed 2,50,000, then only TDS will be applicable. Got it? Then point number 6, maintenance of street lights in municipal area of East Delhi. So they are maintaining the street lights in municipal area of East Delhi. The maintenance contract entered into with Municipal Corporation of Delhi also involves replacement of defunct lights and other spares. However, the value of supply of goods is not more than 25% of the value of composite supply. So we have one point. Whenever we are making a composite supply of goods or services, composite supply involving goods and services to government, and this activity is entrusted to municipality under Article 243W of the Constitution, which means there is an exemption provided the value of goods does not exceed 25% of the total value. Government includes local authority. This is a local authority. Okay. So does not exceed 25%. So yes, the value of goods is not more than 25%. Due to that reason, this is exempted. When the transaction is exempted, TDS is not applicable in this case. Okay, so that is the explanation which you need to provide here. So composite supply, it does not exceed 25%, the supply is exempted. So this is the answer for this question on TDS. They can make a question, not necessarily this big question, but covering these points, a small question also can be given. See, all these MAY 50 questions does not mean the same question or same length of question will come. Out of this, they can take 1 or 2 points also and they can coin a question. Got it? This is like revision of entire subject. In this 50 questions, I have merged all the chapters. Okay, so if this 50 questions you are doing, you will get the coverage of entire syllabus. That is the idea behind it. Okay. Okay, look into question number 36. Messrs. Elite Traders, a registered taxpayer under GST, was engaged in the manufacturing and trading of electrical goods in Mumbai, Maharashtra. Due to financial difficulties, the company discontinued its business operation in December 2024 and filed an application for cancellation of GST registration on Jan 10. So they made an application for cancellation of registration. The company had existing stock of raw material worth 8 lakh, finished goods worth rupees 12 lakhs and capital goods purchased for rupees 15 lakhs, on which ITC was availed at the time of purchase. Okay, now so this is the stock of raw material, finished goods and capital goods. And additionally, Elite Traders had the following compliance issues. Non-filing of GST returns. The company failed to file GST returns for 4 consecutive months before applying for cancellation. Pending tax dues, outstanding GST liability of 3,50,000 was due for the period before cancellation, so they have to pay some tax. Capital goods reversal, the company has claimed ITC on capital goods, this 15 lakhs, and has used them for 3 years before the closure. Now on January 15, 2025, that is, they made an application for cancellation, but they got a notice, so proposing to suspend the registration until compliance issues were resolved. However, on February 20, so they got the cancellation order. February 20, 2025, Elite Traders received the cancellation order. This is the facts of the case. You are required to determine the following. Determine whether proper officer can suspend the registration during the cancellation process. Yes. So whenever we make application for cancellation of registration, our proper officer suo motu initiates cancellation of registration, so they can suspend our registration. They may. Okay. So as per section 29, registered person may make application for cancellation and officer may suspend the GST registration. As they had compliance issues, the proper officer was justified in suspending the registration. Compute the GST payable by Elite Traders on stock and capital goods upon cancellation. GST rate on raw materials and finished goods 18%, capital goods. So ITC to be reversed, assuming a 5-year life at 28% GST. So what is the inputs value? 8 lakhs. Inputs in finished goods 12 lakhs. Okay, so 8 lakhs and 12 lakhs into 18%, 1 lakh 44, 2 lakh 16. Capital goods 15 lakhs, on 15 lakhs 28%, that is 4 lakh 20, divided by life of capital goods is 5 years. So 5 years into how many is the balance life? So it has been used for 3 years. Okay, so 3 years back it is given here, 3 years before closure means 2 years is the balance life. So to that extent we need to reverse. So what is the total GST or ITC reversal is 5,28,000. Then third part, what is the time limit within which application for revocation can be made and whether any extension is possible for such application for revocation? Yes. So once the cancellation order is passed, what is the date on which cancellation order is passed? February 20, 2025. Now from there within 90 days, and it can be extended for a further period of 180 days. Okay, so first 90 days and then 180 days from the date of cancellation of registration, cancellation order, they can make application for revocation. What is the time limit for filing pending returns and returns till the date of revocation order? The time limit for filing pending returns is, so actually, so within 30 days from the date of revocation order. So all 5 pending returns up to the date of cancellation, that is up to February 20, should be filed before making application for revocation of revocation order. That is, all pending returns from the beginning before the cancellation order should be filed before making application for revocation. From the date of cancellation till the revocation order, we need to file the returns within 30 days from revocation order. Okay. Then question number 37. Mr. Gauri Shiva, a registered person in Punjab, supplies goods taxable at 12% in the state of Punjab and Haryana. He has furnished the following details in relation to independent supplies made by him in June. So supply number 1, 2, 3, 4, 7, 8, like that 10 transactions given. Nature of supply, value is given. Okay. First one, Mr. A registered person, nature of supply interstate. So listen, whenever we are making B2B supplies, always we need to give invoice wise details. The question is what, discuss the manner in which details of above supplies are required to be furnished in GSTR1. Gauri is registered person as normal taxpayer but has not opted for QRMP. That's okay. So GSTR1, B2B always invoice wise. First one is B2B, definitely invoice wise. Second one also B2B, definitely invoice wise. Okay. And even 9 and 10 also invoice wise. So first and second invoice wise, 9 and 10 also invoice wise, because everything is B2B. B2C, interstate, if the value exceed 1 lakh only invoice wise. So B2C, yes, intrastate, so full consolidated, 80,000 is full consolidated. Okay. And even B2C intrastate full consolidation 1 lakh 60. B2C interstate exactly 1 lakh, state wise consolidation. State wise consolidation. Then even B2C interstate 50,000, state wise consolidation. B2C interstate 1 lakh 50, more than 1 lakh invoice wise. 1 lakh 50 more than 1 lakh invoice wise. Then next one B2C interstate 1 lakh 80, again invoice wise. Okay. Then next one B2B definitely always it is invoice wise. So that's what each and every point. This is the provision that you need to write. After that you need to fill in this data, because we have an amendment related to how is the invoice values, like invoices to be reported in GSTR1 previously 2 lakh 50, that has been reduced to 1 lakh now. So this previously up to 2 lakh 50 state wise consolidation, interstate B2C, but now they have reduced it to 1 lakh. So up to 1 lakh interstate B2C will be state wise consolidation, and other cases it will be invoice wise. Okay, that is with respect to this. Then question number 38. Mr. Bhaskar wrongly availed 1,25,000 ITC at the time of furnishing written under section 13(9) of CGST Act for the month of October 2022. Wrongly availed. This ITC is not utilized against the output tax liability for the month of October. Mr. Bhaskar utilized of rupees 75,000 from the above wrongly availed ITC of 1,25,000 against output tax liability for the month of November. So 1,25,000 availed, November only it has been utilized. Mr. Bhaskar paid the amount of ITC wrongly utilized 75,000 on 10th March 2023 and reversed the unutilized amount of ITC wrongly utilized 75,000 on 10th March and reversed the remaining unutilized amount of 50,000 on 20th March. Calculate the total interest payable. So rounded off to nearest 1 rupee under GST law. If Mr. Bhaskar files 3B for the month of October on 18 November and November on 25th December, assume there is no extension of due date of filing 3B and no other transactions. First, what is the wrongly availed ITC? 75,000. That 75,000 is utilized on 10th March. So utilized 75,000. Okay, wrongly availed for the month of November. So November month it is utilized. So we need to count interest from 25th December 2022. We need to count interest from 25th December 2022 and thereafter paid the amount of ITC wrongly utilized on 10th March and reversed the unutilized amount of ITC wrongly utilized. So out of 1,25,000, 75,000 is over 10th March and remaining 50 on 20th March. So first of all on 50,000 there is no interest. Only on 75,000, that too on 10th March they have reversed. So means 10th March up to that. So 25th December to 25th December. But actually while computing the date of utilization, we should take the actual date of 3B or due date of 3B, whichever is earlier. For November, what is the due date of 3B? 20th December or 25th December, whichever is earlier. So 20th December. We need to count interest from 20th December till the date of reversal, that is 10th March. So we need to compute interest. December 11 days, January 31 days, February 20, this is 2023, 28 days, and March will be 10 days. Okay, so do the calculation here. So what happens for the month of December 11 days and January 31 days, February 28 days and March 10 days, that is 80 days. For 80 days, we need to compute interest only on 75,000 at 18%, 80 days, 2,959. That will be the interest computation in this case. Okay. So we need to compute the interest accordingly. So this is the answer for this. Wrongly availed. On 50,000, there is no interest computation. Got it? Then question number 39. The Resident Welfare Association of Blue Heaven Housing Society in Delhi provides the following information with respect to various amounts received by it in the month of January 2021. Monthly subscription collected from member families 8,500 each from 100 families. 8,500 exceeds 7,500. So that should be taken fully taxable, and 8,50,000 is fully taxable. And then electricity charges levied by state electricity board. Actually, this electricity bill is in whose name? It is in the name of the members. Who paid? Association paid. It will not be included in the value. It will not be included in the value because the bill is not in the name of the association. It is in the name of the members. The same was collected from members and remitted to board on behalf of members. That will not be included in value. Electricity charges levied by State Electricity Board on the Resident Welfare Association in respect of electricity consumed for common use of lifts and lights in common area. Bill was raised in the name of association. Association collected the said charges by apportioning them equally on actual basis, not on ad hoc basis. Again, this will also not be included because they are just recovering on actual basis. We have a CBIC circular related to this. Then proceeds from sale of entry tickets. Entry tickets to cultural program, we don't have any exemption, so therefore entirely taxable. Proceeds from sale of advertisement in members directory, we don't have any exemption, entirely taxable. So therefore 11,90,000 will be taken as the value of taxable supply on which GST payable. Mainly this question is based on that circular related to electricity charges. Okay. Next, question number 40. Determine the value of taxable service in respect of transportation service provided by Om Shri Transport Agency, a GTA, as follows. So they are asking only the value of taxable service. Okay. Transportation of salt and food grains we have in the list of notified goods, therefore it is exempted. Consignment of books transported in single carriage, we don't have any exemption for that, so it is taxable. Transportation of color TV sets, taxable. Transportation of auto spares to individual who is unregistered person, so individual is exempted, because if the recipient is unregistered individual, HUF or AJP or a trust and not having a factory, then it is exempted. Transport of military equipment is also exempted because it is in the notified goods. Then freight collected for transporting small consignments, we don't have any exemption, taxable. Transported goods of local authority who took registration only for deducting TDS. So if the recipient is government which is registered only for deducting TDS, even then it is exempted. Okay. So only 1,50,000, 1,35,000, 10,000. 1,50,000, 3,55,000 and 10,000. These three are only taxable. So the value of taxable service will be 5,15,000. So that is this. Next one. So question number 40 is on purely GTA services related exemption. Usually what happens in your question number 1, that question number 1 there will be two parts. A part will be for 10 marks and B part will be for 5 marks. In that 5 marks they will be usually asking a question on exemptions, that is this. Question number 41, comment on the liability to get registered under GST law in the given independent situations for financial year under, that is your answer should also include relevant provisions of the law, notifications or circulars. Okay. So liability to get registered, this is related to the threshold limit. Okay. Miss Ridhima is exclusively engaged in export of ready-made garments from the state of Rajasthan and has her export turnover during the year is 17 lakhs. Apart from export turnover, she has earned interest on bank fixed deposits for 2 lakhs. See, first of all, exports is what? Interstate supplies. Whenever a person is making interstate supplies, they are compulsorily required to get registered. Okay. So therefore, it is an interstate supply and compulsorily required to get registered irrespective of the threshold limit. Number 2, Ajanta Enterprises is exclusively engaged in trading of exempted goods under GST in the state of Haryana and has not taken GST registration. During the year, its turnover exempted supplies 47 lakhs and Ajanta Enterprise also sold old generator for 1.25 lakhs during the year. So this exempted supply of goods 47 lakhs, but 1.25 lakhs taxable. Now aggregate turnover exceeds 40 lakhs and they are exclusively engaged in trading in Haryana. So what is your answer? They are liable to get registered. Why liable to get registered? See, only exempted, exclusively exempted supplies, only exempted from registration. If they are selling exempted goods and selling taxable goods, now combine both, and if it crosses the applicable threshold limit, then they are liable to get registered. Then next, third, Mr. P has presence in two states, one in Haryana and other in Rajasthan. He is registered in Rajasthan even without crossing the threshold limit. His turnover during the year in Rajasthan is 32 lakhs and Haryana 5 lakhs. Is he mandatorily required to get registered in Haryana also? See, once a person is registered in one state, they are also required to get registered in another state. Okay. So, therefore, he is liable to get registered in Haryana also, provided he is not engaged exclusively in making exempted supplies. Unless in Haryana he is engaged in exempted supplies, even though voluntary registration, see, voluntary registration or compulsory registration, whatever the case may be, once a person is liable to get registered, they need to register in every state from where they are making taxable supplies. Okay. Then, however, a person who is voluntarily registered needs to obtain registration in other state from where he makes taxable supplies only if his aggregate turnover exceeds applicable threshold limit for registration. See, basically, once a person is liable to get registered, that's the word I used. Once a person is liable to get registered, then they need to register in every state from where they make taxable supplies. Is he liable to get registered? No, he is not liable to get registered. So in that case, P is not liable to obtain registration from Haryana since aggregate turnover does not exceed the threshold limit. You understood? The provision says if a person is liable to get registered, then they need to get registered in every state from where they make taxable supplies. But in this case, are they liable to get registered? No, voluntarily they are getting registered. So that point is not applicable to Mr. P. But compulsory registration or aggregate turnover exceed threshold limit, then they are liable to get registered. Next. So Mr. John is engaged in the business of buying and selling of shares on his own account from the secondary market, and his income from this activity is assessed as business income. During the year, he had total turnover from shares was 90 lakhs. He is engaged in sale of securities. So sale of securities is neither goods nor services. So therefore, he is not at all making any supply. So he is not liable to obtain registration. Okay. So because he is not engaged in making a taxable supply of goods or services. Next one, Baba Private Limited engaged in cultivation of land in Tamil Nadu, and they sold agricultural produce out of cultivation of land to the extent of 75 lakhs. They employed hired labor to cultivate and harvest various crops. So now in this case, whether it will be included, they employed hired labor to cultivate and harvest various crops. So what is your answer? If they are engaged exclusively in as an agriculturist, okay, cultivation of land and they sold the agricultural produce. So either on their own account, like either they can do agriculture or they can employ the hired labor. So but they are coming under agriculturist, and they should be only individual or HUF. The meaning of agriculturist is only individual or HUF, but private limited company will not come under agriculturist. Agriculturist means only individual or HUF but not others. In the present case, such exemption is not available as the cultivator is other than individual or HUF. Also, as Baba Limited's turnover exceed threshold limit, they are required to get registered. Be careful with respect to this. So these are all some critical points in registration, not just direct points. Directly already we know, but these are all some hidden points which is so much confusing that they can make a question like this. Then question number 42, Draco Private Limited is a company engaged in refining the crude petroleum into petrol. It also sells crude oil to other similar companies. On October 2019, it acquired a license for exploration of crude oil from Punjab government by entering into production sharing contract from government. On March 2020, its research team entered into exploration of crude petroleum and incurred the following expenses. Expenses for exploration 50 lakhs, expenses incurred for development 8 lakhs, expense incurred for production 70 lakhs, royalty paid 15 lakhs. After incurring the following expenses, Draco Private Limited sold the crude petroleum extracted from Punjab to Marvel Private Limited of Delhi for a consideration of 2 crores on 1st December 2020. as per production sharing contract, the company is entitled to provide 40% of profit petroleum. First of all, we will try to arrive at the profit. What is the remuneration? What is the revenue that they generated? 2 crores. What is the cost petroleum? Recovery of expenses 5870. Okay, and 1 crore 28, and even royalty also we need to reduce. So we get the profit 57 lakhs. Out of that 57 lakhs, 40% will go to government. Profit petroleum payable to government 40, Draco Private Limited 60%. Okay. The board of directors of Draco Private Limited wants to know if GST is payable on profit petroleum paid to the government. No, there is no GST on that. On this royalty, there is GST payable, but not on the profit petroleum. Share of profit petroleum is exempted. Royalty payable by Draco to government is consideration chargeable to GST under RCM, whereas cost petroleum is not taxable, it is exempted as per CBSE circular. Also, profit petroleum to government in the nature of revenue sharing, and the same is also exempted. So this question is purely on cost petroleum and profit petroleum, and you may get a question like this. Then question number 43, determine whether GST is payable in respect of each of the following independent services provided by the registered persons. Services provided to a government authority by way of slum improvement upgradation. Slum improvement and upgradation is a notified activity and that is exempted. There are few activities in that slum improvement upgradation is there, consequently it is exempted. Next, number 2, fees of 20,000 charged from office staff for in-house personality development course conducted by Banaras Sidas College, providing education as a part of curriculum for obtaining a qualification recognized by Indian law. So this 20,000 rupees of fees will be treated as taxable or will be treated as exempted. So any service provided by an educational institution to its students, faculty and staff is exempted. Accordingly, this 20,000 will come under exemption. Okay. Then next, so this is exempted in this case. So since Banaras provide education as a part of curriculum, the service provided to its staff would be exempt from GST. Third, bus fees of 2,000 per month collected from students by RPSD college. This is service provided by educational institution providing education as a part of curriculum for obtaining a qualification recognized by Indian law. That is exempted because services provided by educational institution. Had it been to educational institution, that will be not covered under exemption. Housekeeping service provided by Buff Limited to Bloom Montessori School. This is service provided to educational institution. But Montessori School, Play School is a category 1 education institution for cleaning its playground and classroom within the premises, housekeeping service. So this 30,000 rupees will be covered under exemption. The next one, Grow Buds supply Gratitude Jot in online educational journals to students of UKG class of Seats Montessori School. So supply of online educational journals and periodicals only to category 2 institution will be exempted. To category 1 is not covered under exemption. Consequently, it will become taxable. Okay. So it is not exempt from GST. Then look into this. Question number 44. Upasana Export House is engaged in manufacturing the taxable goods in the state of Haryana. It participates in global trade fair to be held in United States of America in the month of January. It intends to send 100 units of goods manufactured by it to USA for display in the exhibition. Whether goods sent outside India for exhibition is supply or not a supply? Not a supply. Upasana Export House is of the view that the activity of sending the goods out of India for exhibition is zero rated supply. No. Even though it is export, taking goods from India to outside India is export, but first of all it is not a supply. It will not come under 71A, 71AA, 71B or 71C. As it is not a supply, it will not come under zero rated supply. However, its tax advisor does not concur with its view. Examine whether the view of Upasana Export House is correct. Assuming that Upasana Export House could not sell any goods at the exhibition and brings back entire 100 units to India in February and in August, discuss the requirement to issue invoice. We have that sale on approval or on return basis, section 31 subsection 7, which says that if the goods are taken outside India for exhibition and if it is not brought back within 6 months from the date it is sent out for exhibition, then it will be treated as supply on expiry of 6 months. So what is the date on which it is taken outside India? in the month of January. In the month of January means when is it returned? February, within 6 months. So there is no consequence, deemed supply will not come. August means 6 months will get over by June. So it will be deemed as supply and they need to raise the invoice. Okay. So first one we need to write that it is not a supply. Second, so 100 units brought back within 6 months, no supply. After 6 months, then it is treated as supply and we need to raise the invoice accordingly. So that is what we need to write. First we need to write about supply, then export, and thereafter it is not zero rated supply, and then we need to connect with that section 31 subsection 7, sale on approval or return basis. Then question number 45, computation of value of taxable supply from the following information. Determine the value of taxable supply as per the provisions of section 15 of CGST Act. Value of machine, what is the value of machine in this case? So 15 lakhs, that will be the transaction value including GST. Whenever we have including GST, first you make all the changes like adjustments, and finally whatever you get as value, from that you take out GST. Okay, so this 15 lakhs is transaction value. The invoice value includes the following: taxes other than GST charged separately by year. Actually it is to be included as per 15(2)(a), and in the given price it is already included, so therefore ignore it, don't add. Weightment and loading charges as per 15(2)(c), incidental or other charges before delivery, it should be included, but in the given price it is already included, so don't add. Same way, consultancy charges in relation to pre-installation, testing charges and inspection charges, all these are incidental or other expenses which are charged before delivery of goods, so it is to be included. In the given price it is already included, so no need to add again. Then other information, subsidy received from central government for setting up a factory in backward region. So how we need to consider this subsidy? Is it directly linked to the price or not directly linked to the price? Not directly linked to the price. Why not directly linked to the price? It is not for outward supply. For setting up factory in backward region, it is not directly linked to the price, so therefore ignore it for valuation. Subsidy received from third party for timely supply of machine to recipient, 50,000. This is directly linked to the price. It is from other than CGRSG, so it is to be included in the value. As it is given as other information, means the given price is after excluding that subsidy, so we need to add that 50,000. Then trade discount actually allowed shown separately in invoice. In the absence of information, usually subsidy is reduced from the price. Okay, and that's the assumption we are taking. So this 50,000 to be included, in the given price not included, so we need to add. Then trade discount actually allowed shown separately in invoice, so we need to reduce this trade discount. So if you reduce it, so therefore 15 lakhs plus 50,000 minus 24,000, so 15 lakh 26. Okay, but we need to write the explanation for each and every point, and thereafter, so whatever is the GST component we need to take out, because all these adjustments are also assuming including GST at 12%. So 12% into 12 by 112, if you take out, then you will get the value of taxable supply. Okay, then next one, see question number 46. Measures all-in-one, a partnership concern and a registered supplier under GST is engaged in providing various services under one roof. The concern provides the following information pertaining to supply made or input service availed by it during the month of March 2022. They have given some 7 transactions. Determine the GST liability of measures all-in-one for the month of March 2022 by giving necessary explanations for treatment of various items. Rate of tax for both inward and outward supply is CGST, SGST 9% each, except for renting a vehicle, for which CGST, SGST at 2.5% each is applicable. Measures all-in-one commence its business from February. All the supplies are intrastate unless specifically made applicable. Okay, so first, direct selling agent service to Y Bank Limited. Whenever they are providing direct selling agent service to Y Bank Limited, 4 lakhs. So what will be taken in this case? DSA, direct selling agent services. Whenever they are providing direct selling agent services to a bank, if the supplier is other than body corporate or firm only, it will be covered under RCM. But here the supplier is a partnership concern, so therefore it will be covered under FCM. And moreover, it is what provided direct selling agent service, and all these transactions are intrastate supply now. All supplies are intrastate unless specifically applicable. So intrastate 4 lakhs into CGST, SGST 9% and 9%. So that will be the GST liability on outward supply. Then second, provided security services to ABC Private Limited, registered person under GST. Security agency services, supplier is other than body corporate, yes. Recipient is registered person, yes. So it will come under RCM, not including the supplier liability. So GST payable by ABC Private Limited. So don't add it to the supplier liability. Got it? Outward supply only, but don't add it to supplier liability. But we need to write a note related to that. Next one, provided recovery agent service to Zen Limited, a financier in motor vehicles. So it is coming under FCM only. Generally, recovery agent service to bank, financial institution or NBFC is only RCM, but otherwise it will be FCM to others. So therefore, they only should pay 1 lakh into CGST, SGST 9%, 9%. That is their outward supply. First one is also outward. Second one is also outward. And third one is also outward supply. Okay. Then provided renting of motor vehicles to Amaze Tours Limited and supply value included, cost of fuel 75,000. So renting of motor vehicle to Amaze Tours Limited and supply value included. So renting of motor vehicle, supplier should be other than body corporate, yes. Recipient should be body corporate, and the rate is 5%. So which means it will come under RCM. So Amaze Tours only will pay, even though it is outward. Don't add it in the liability of all in one. Okay. Don't add it in the liability of all in one. Next one, paid sponsorship means it's an inward supply. So it's an inward supply, paid sponsorship. So in case of sponsorship, the recipient is body corporate or firm, it will come under RCM. This is inward RCM, means all in one only will pay GST under RCM. So add it to RCM liability. Received sponsorship service from Preeti & Co. So it will come under RCM 40,000, CGST 9%, SGST 9%. Then next, availed representation service, inward supply, legal services towards a consumer court case. And here, if you see, they are registered, engaged in providing various services. And for these legal services, we have exemption. When we have exemption, so if you observe here, what happened? The partnership firm, registered supplier, engaged in providing various service. The concern provides the following information pertaining to supply made during March 2022. Determine the GST liability March 2022, and all in one commence business in February. So means their aggregate turnover during the previous year does not exceed threshold limit. See, last somewhere they have given their aggregate turnover. Generally, legal services provided to a business entity whose turnover during the previous year does not exceed threshold limit is exempted. Accordingly, it is exempted. Okay, it's an inward supply, but it is exempted. First of all, there is no GST with respect to this, nil. Then next one, imported cloud storage service from Google Corporation. So import of OIDR service is always taxable, and the recipient is registered. So it will come under RCM. Again, inward RCM, but remember it is IGST. It is IGST, not CGST, SGST. So 60,000 into 18%. So that is 10,800. The question is here. So determine the GST liability. So this is their FCM liability 45,000, 45,000. RCM liability will be 3,000, 3,000 and 10,800. Got it? So it's a good question, like 10 marks question. Your first question, kite off. Next, question number 47. Mr. Vicky Franklin, an unregistered famous author, received 3 crores of consideration from Shiv Bhagwan Publications located in Indore for supply of service by way of temporary transfer of a copyright covered under section 13A for copyright services. So if the copyright is belonging to author which is given to any person, the liability to pay GST is on recipient. So Vicky Franklin is not liable to pay GST. Shiv Bhagwan Publications is liable to pay GST. However, if Vicky Franklin opt to pay GST under FCM, then for the next 1 year from the date of excising option, he only should pay, correct? But what happened? He did not opt it, and he finished his work and made available the book to the publisher, but has not yet raised the invoice. Vicky Franklin is of the view that SBP is liable to pay tax under reverse charge on service provided by him. True. SBP does not concur with his view and is ready to deposit the tax under any circumstances. So it is covered under RCM. First, we need to write about section 9 subsection 3 read with notification 13 of 2017, that is services provided by. services provided by way of temporary transfer of copyright related to original literary to any person is covered under RCM. In the present case, Shiv Bhagwan Publications is liable to pay GST under RCM. That's the first part. Examine whether the view of Vicky Franklin is correct. Further, if the view of Vicky Franklin is correct, what is the recourse available with Vicky Franklin to comply with the requirement of GST law, as SBP completely refused to deposit the tax? In case when SBP recipient refused to deposit tax, and if Vicky Franklin wants to comply, he can opt to pay GST under FCM, and if he opts for the next 1 year from the date of excising option, he only should pay GST under FCM and recover the GST from Shiv Bhagwan Publications. So that is what we need to write here. That's the answer for this. Then question number 48, determine the person liable to pay GST and extent of GST payable in the following cases. All sums are exclusive of GST and the GST rate is 18%. Unless otherwise specified, both service provider and service recipient are located in India. GIC insurance company pays commission to its agent. Agent has not provided any services and is eligible for small service provider exemption. Irrelevant. So whenever agent is providing services to insurance company, the liability to pay GST is on insurance company because it's covered under RCM. And if the agent is in rural area, then it is exempted. Service provided to an individual by way of sponsorship of events. So as the recipient is individual, it will come under FCM. So liability to pay GST is on supplier only. Service provided to a company by way of sponsorship, it is RCM, because in case of sponsorship services, if the recipient is body, corporate or firm, then it will come under RCM. Then 4, service provided by director of a company to company. Director to company will come under RCM. But if the director is acting in his personal capacity, then it will not be RCM. Depending upon the service, we need to determine. Okay. But here nothing is given, so it will be RCM. It's a simple question. Then question number 49. Dobriel Technocrats Limited, registered in Gurgaon, Haryana, is engaged in manufacturing heavy steel machinery. It enters into an agreement with Mindsharp Associates, registered in Delhi, for imparting motivational training to top management of Dobriel Technocrats in a 5-day residential motivational training program at an agreed consideration of 20 lakhs. So this is training and performance appraisal services. Okay. And Mindsharp Associates books a conference hall along with the room of Hotel Chamcham Nimrana for the training program for a lump sum consideration of 12 lakhs. First one is training services. In case of training services provided by Mindsharp Associates to Dobriel Technocrats, so it is B2B or B2C? B2B. So for training and performance appraisal, B2B, location of recipient should be taken as the place of supply. Accordingly, here Gurgaon, Haryana will be the place of supply. Second one is between Hotel Chamcham to Mindsharp Associates, renting of conference hall. Renting of conference hall means service in relation to immobile property. Location of immobile property, where is the immobile property located? Rajasthan. So therefore that hotel Rajasthan will be taken as the place of supply. So like this, from the question you need to identify the transaction and determine what is the place of supply. Like this also you may get a question. Then last question, question number 50. With this we are going to complete MAY 50 questions. Concentrate, come on. Mr. Alan, a non-resident person, wishes to provide taxable supply of goods in India with effect from 1/7/2024. He has no fixed place of business or residence in India. He imports goods worth rupees 20 lakhs, basic customs duty 10%, social welfare charge 10% and IGST 18%. His expected outward supplies in India is rupees 40 lakhs, excluding GST at 12%, and inward supplies in India is 25 lakhs excluding GST at 18%. He seeks your advice on the following aspects relating to CGST Act. When shall he apply for registration? See, basically he is a non-resident taxable person. A non-resident taxable person who is entering into India to make supply of goods or service and is not having any physical place of business is compulsorily required to get registered, and he need to make application for registration at least 5 days before commencement of business. At least 5 days before commencement of business, you need to make application for registration. Is permanent account number mandatory for his registration? No. So as he is a non-resident, using his passport number, he can do the registration granted on passport or any identification number. However, that application should be signed by his authorized signatory having a valid permanent account number. What is the period of validity of registration granted to him? So the period of registration will be number of days he apply for registration or 90 days. Okay, number of days for which you apply for registration subject to maximum 90 days. And will it be able to extend the validity? Yes, it can be extended for a further period not exceeding 90 days. That is what. So 90 days or number of days specified, whichever is lower, it can be extended for a further period not exceeding 90 days. Can he avail ITC on inward supply? How much ITC available in the given case? He cannot avail ITC on anything because it's block credit. However, he can avail ITC only on IGST paid on import of goods. So on import of goods 20 lakhs, he pays a IGST 18%. That 18% only can be taken. But how to compute that 18%? While computing the GST on import of goods, other things we need to add. Okay, so basic customs duty 10%, social welfare surcharge 10%. So 20 lakhs, see this, 20 lakhs is the assessable value, basic customs duty 2 lakhs, social welfare surcharge is 10% of 2 lakhs, 20,000, everything, because as per 15(2)(a), all taxes, duties and cess by whatever name called other than GST should be included. Accordingly, 20 plus 2 plus 20,000, on that we need to compute 18%. So 22 lakhs into 18% is the ITC that can be taken. So what is that? 22 lakh 20,000, okay, 22 lakh 20,000 into 18% comes to 3,99,600. Okay, so 3,99,600 already it is given, that should be taken. Then finally one question, compute the advance tax payable by him. So every CTP and NRTP is required to deposit estimated tax liability. So what is their estimated? So their estimated outward supplies is 40 lakhs. 40 lakhs into 12%. So 40 lakhs into 12%, 4 lakh 80, and what is ITC that is available to them? Estimated ITC 3 lakh 99. So therefore estimated net GST payable is 80,400. That much they need to deposit. So with this we completed MAY 50 questions, and hope we have got the coverage of entire portion, and these questions will really help you for the forthcoming exam. And friends, as I already told you, see, these 50 questions is just the reference. At least these 50 questions, it is like a revision of entire portion and we can do for exam. And it does not mean from these 50 questions only questions come in exam. If that be the case, then I would have sold this for some good price, because guarantee I can give. No, I cannot give a guarantee and all for this. Okay, but some students will feel like this is like a revision which will help them for exam. For that purpose only it has been given. Okay, and all the very best for your exam. And one thing, like two requests for you. Request number one, please subscribe to this channel, and which I requested in video 1, part 1 also. And another request is that we are launching CMA Foundation and CA Foundation regular batches at a very nominal decent fees, and we will be providing good quality to the students also. And our batch size is very limited, and personalized focus also will be given. So please request your known people to inquire about the course, etc. and all, and they can join for CA Foundation and CMA Foundation classes with us. And inter batches will be starting from next year, inter regular batches. This year we have only revision batches for CA inter, power prep batches, and next year onwards we are going to plan for regular batches as well. Thank you, and we will be meeting so in the marathon one day before exam. Got it? Thank you. Take care. Bye.